Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, June the 14th. The year's 2021. Let's talk trading. DSR trading with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. So, DSR trading. What is DSR? Basically, it's dynamic support resistance trading. So what we're doing, it's a DSR. The R is basically because we're looking for a reversal. Is that right, Walmall?
Yeah, exactly. It's one of those things where you just go and you look for the trade based on what the rules are. Just follow the rules and you should be good. DSR trade, you're looking for a reversal after a move in a particular direction. In the Walmart trade, more times than not, it's just an extension of a move. However, I've even used it where it was from the previous hours actually, a retracement of some sort.
Right. So DSR comes from my the TRO dynamic SR support resistance indicator. And we use that in conjunction with the 3-level ZZ. But actually, you don't even need the dynamic support resistance indicator. You can just look at the 3-level ZZ. And most of the time, we look for reversals off of a 3-ball, sometimes off of a 2-ball, or a 1-ball if it's near the 3-ball level.
Right, and that's what's important. You're looking for something. What does DSR stand for? Dynamic support and resistance. So we don't talk a lot about this idea of support zones and resistance zones, and here on this particular channel. But there are dynamic support and resistance that we do talk about, and the whole idea that recently, and when I say recently, over the last let's say for a 3-ball, over the last 34 candles essentially, has there been some type of resistance or some type of support that was put in place that for whatever reason prices reacted to it? And if it has, that gives us a really good clue as to what price is going to do if it returns to that level. And that's what we're trying to do, is actually take those quick pips off of those the movements away from a particular area of support or resistance.
Yeah, and so in the our original DSR trades, really the SR is support resistance, but it is a reversal trade. Is what we would do is we would wait for a 3-ball, and then we would do what's called a wait candle. We wait for that second 1-minute candle to close, and then Walmart would take the break of the high of that candle, right?
Yep, that's exactly right. So what I would do is,
or would you take the break of the high of the 3-ball candle?
I would do, depending, on the situation, I would do one or the other. So let's say if we put a 3-ball in on the top, okay, and I then get, let's say the price moves away from it a little bit, and then the next minute comes along and I get a green candle that's going to break the top of that 3-ball, yeah, I'd take that trade. I'd take that trade, but I'd also take that trade knowing that, hey, this is a little bit of it. It's an area of interest. It's an area where prices reversed off of it in the past. But the thing is, a lot of times that's where you could get some nice breakouts. So just be aware of what's going to happen. Pay attention to what's happening on the chart and react to what's happening on the chart. You may be able to pick up a pip or two. You may lose a few pips. And that's the nice thing about this, that your stop loss are usually pretty close. You may lose 3 pips tops, maybe 4 pips if you really let it go. But the nice thing about it is, more times than not, when I say more times than not, I'm talking about 70, 80%, maybe 90% of the time, you can pick up a pip easy off of this, and and a good 10% of the time, you can pick up 4, 5, 6, 7 pips off of that break. So that's the nice thing about that type of trade, taking a break off of it. And at the same time, if it turns out that it puts in 3-ball at the top, and it comes off of that 3-ball, and then we wait a 1-minute candle, and it puts in a black candle or a red candle, depending on how you have your chart set up, and so it's telling us now, hey, we've moved away from that. For whatever reason, that level is pretty significant. The very next candle, you go and take that trade, and you take that trade in the opposite direction of that 3-ball, and a lot of times right there, that's usually a very nice trade where you can pick up 3 to 5 pips pretty easily. And again, because what you're doing is you're using that 3-ball as your stop loss. So again, you're only taking a risk of maybe 3 pips for the potential gain is somewhere between 3 to 5 pips. Yeah, I know it's only 1-to-1 risk reward. But the nice thing about it is that you know right away, and you can a lot of times get in and out very, very quickly and just pick up a couple of pips.
Yeah, so in fact, right now we're at a Walmal line on the pound here at the 20.
Yeah.
And one of the things we were talking about before we started the video, I was saying how price was near the daily open, because my daily open was around 14. And you can see here I saying, basically playing the cross of that daily open. I didn't want to go against it.
Right.
See, because the daily open here is 14.5. It just came up on my price near chart.
And the thing is about taking a Walmal trade here, it's a little bit dangerous to take a long here. And the reason why it's a little bit dangerous to take a long here is that look at the last, 5-6 hours. All of our hours are very, very compressed. They're right around 10 pips, 11 pips, 12 pips, something like that. Very, very compressed. That's the first thing. So that gives you a clue. Okay, our potential for getting a lot of pips is greatly diminished. It could happen. We're probably going to have an hour today someplace along the line where it's a 30 or 40 pip hour. It always, it just seems to happen every day. But the thing is, that's not what we've seen today, so we need to be a little bit cautious. The second point of caution here is that if you look at the last hour, previous hour, the high was just at this line of 20, like 20.5, and the hour before that, the high was like at, I'm guessing these numbers, so don't hold me to them, but somewhere around 21.5, and and then the hour before that was only like 23 or 24. So there's been, so much, there's been, some type of wall there that's been built that for whatever reason price doesn't want to get above that. And then in addition to that, if you go back, 2-3 hours, every hour, those highs have been, they're going lower and lower on the chart. That gives you a clue that, hey, your price is absolutely ranging. There's no question about the fact that price is ranging, but the range right now, it seems to be going generally in a little bit of a downward direction. Not a lot. Only about a pip or so every hour, but it has done that. And that just gives you a clue that, hey, I can still take that trade, but let's, it's sort of like buyer beware. Take the trade and be ready to jump out of that trade right away if it doesn't work for you. But the nice thing about that type of a trade, though, is if it does break it, it's going to break it pretty significantly. And that's the reason why sometimes you take the trade, but know that you can take the trade with a little bit of caution involved.
Yeah, now back to DSR trades. You can see here, I've got the TRO HL5 to plot the highest low and lowest high. And you can see here in the parentheses 34, that's the last 34 bars that correspond with the 3-ball. And we had 2 minutes ago, we had a break of that level, but we probably wouldn't have taken that trade. At least I don't think I wanted to. What about, you see the trade I'm talking about, right? Did I lose you, Walter?
Are you there, sir?
Yeah.
Okay. My dog went nuts, so I put you on mute for a second.
Oh, I was asking you, there was a trade 3 1-minute candles ago now, a short coming off of that 3-ball, but I wouldn't have taken it. Would you have taken that one?
I probably wouldn't have taken that trade, and the reason why is because the M5 candle was they were all red candles, and it's sort of like, I'm not going to go against that M5 candle in this situation. I generally like to go in the direction of the M5 candle. Now, I violate that sometimes, but here are the reasons I violate it. I violate it when that M5 candle is about to go from in this case from white to black. If it's about to go and make that changeover, yeah, I'll go and take that trade, but I'm not going to take it where, in this case, those M5 candles, they're all, not strong candles, but they're certainly, compared to the rest of the chart, they're pretty strong. So I'm not going to take that chance. Now, right now, I would take it on the 5-minute chart. I probably would have taken this M5 break at the bottom off of that one candle. I would have taken right at right after the open when that candle went and turned black, and I'm taking a chance here, and I would have been up maybe a half a pip or so, but again, my finger would be sitting right there on that close button, waiting to see what this is going to do. So, there's these are a little bit high risk, trades, but sometimes they work out, sometimes they don't, But the reason why I probably take it again, because I've been going in the direction of the M5 candle, I would only risk 2 pips on the deal. And if I would have just gotten out, I would have gotten a pip and a half. Now I would have just taken my pip and a half and been happy, Again, it would have been, even a little bit less than a 1-to-1 risk reward, but I would have been in and out of that trade in 30 seconds or so. And that's just me and how I trade it.
Yeah, because, the way I look at it is you can see this box here. So, at the edge of the box, that's the exit, and that's only maybe a 5 pip. But if you go from the highest low down to the lowest high, you've got about a 6-7 pip range. So that's maybe a 1-to-1. But like you said, you're trading price action. So if you see 2 pips and it stalls, hey, you take your 2 pips, you're out.
Right.
Because
exactly.
Otherwise you'd be negative right now.
Exactly, and that's what you got to do. And you got to make a determination, is this the type of trader you are? Some people don't have the stomach for doing it, and I'm not belittling anybody, but some people just can't do it. It's just because, you don't have the stomach because, hey, I was up, I'm up $50, and now I'm down $50. And, what the heck happened there? You wind up getting into that, and it can mess with you pretty badly. Or from the other perspective, you just may not have the reaction time to be able to do it. And, do you have the motor skill to be able to go and say, there's the trade, pounce on it, okay, and just take it. There's the exit, pounce on it. You got to be able to go and have those lightning quick reflexes to do that type of a trade. And again, I'm not picking on anybody. It's just, that's just the reality of that type of trade. You just got to go and you got to be able to see it, process it immediately, and get out immediately when it's time to get out. And you can make some nice change that way. Some people just can't do it. Other people can make a living at it. I saw one guy, and I mean, he was just racking them up, just doing nothing more than grabbing a pip at a time. And across the day, he was picking up 70, 80 pips a day, just doing that over and over and over again because, he made me look like a total amateur, but he was really good at that.
So, anybody out there that, wants to consider doing a DSR trade, the first is you wait for a ball, usually a 3 ball, sometimes a 2 ball to get put in. And then you wait one, and you're on a 1-minute chart. So let me switch over to the 1-minute chart. So right here, you have a 3 ball. And in this particular case, since the 3 ball candle was a white candle or bull candle, well, as soon as it breaks the high, that's the entry. Now here on the upside, there was a 3 ball, and then right here, this came down, and you'd be looking to the low of that 3 ball candle. You'd want to take it as soon as it breaks the low. And sometimes you have a wait candle, and sometimes it just breaks it, and you just take it because it's broke. Because that's the level we're looking for price to escape from. In other words, looking for price to say, hey, you know what? In this case, the buyers pushed it up, but the sellers are pushing it back, and the sellers are about to make a gain, in territory. And that's how we trade it. But normally there's a wait candle in the process, and we look, and that's just a confirmation because that next candle could put a new 3 ball in. In the case here it could have been higher, in the case here it could have been lower, and so you don't want to. That's why we like to wait and see what price is doing. And guess what? You know what, Walmal? So 15 minutes, fastest 15 minutes of trading is up. So we're definitely going to revisit this, I guess, for the rest of the week. So fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.